Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. I wanted to cover my current open holdings. I believe there are one, two, three, four, five, six, seven. First of all, on the S&P 500, we're very close to a bearish signal, so I will keep you apprised of that. But while I have seven long ideas currently or buy recommendations, I did close out XLU, the which is the utilities ETF. I closed out Southern Company, another utility. I closed out ABBV. Those were great winners. Utilities have been the best performing sector in the last couple of months. Healthcare also, and AbbVie was up over 20% a couple of months. Anyway, I'm going to cover what I'm currently long, and let's get into it. I want to make this not too long. So here's FXI, the China large cap ETF, and the downtrend, these two big downward sloping parallel red trend lines. The China ETF was able to break out of that back in like March. And what I think we have right now is a inverse head and shoulders pattern with the left shoulder here, the head, and currently forming a right shoulder. But we really need prices to hold above my stop. And you can see when I recommended that back in March, I put my stop here, initially here in March, and then I raised it a little bit. And intra-week today, this past week, prices broke below, but we're able to regain that. So we're hanging on by our fingernails. But the potential here is really big. So anyway, that's where we're at. I'm still recommending a buy recommendation, and the reward to risk right now is really, really big. So if it holds and you buy some, you'll do really, really well. If you buy some and you get stopped out at 24, 25, you'll lose, I don't know, 2, 3, 4, 5%. But the reward to risk is really, really favorable. So still like China large cap, but it's hanging on by its fingernails. GDX, the gold miners. So the gold miners, big inverse head and shoulders pattern. This goes back to 2020 where it started. 1, 2, 3, 3.5 years in the making. Here's the left shoulder. Here's the head. Here's the right shoulder. It's like a man or woman hanging upside down. And here is your neckline. And prices broke out, initiated with a buy. I put my stop here. The reward price projection based on this pattern was 50 or 47% higher. And you can see my stop was here at about 32. I've raised it to about 32.50. And again, the reward to risk right here is phenomenal. We'll see what happens. But I like the pattern. I like the higher highs and higher lows. And so continue to recommend GDX, the gold miners ETF. Reward to risk is really, really great. Look at fixed income. I'm going to focus on the 20-year Treasury. While I recognize that not all fixed income is the same, I prefer Treasuries over corporate credits. I don't look for bond holdings as a aggressive move. I want my bonds, I want my treasuries to work when the market doesn't. And like recently, and TLT, the 20-year treasury, I think is what I've recommended, and I'm going to stay with that. So here's the big, just to give you some context on a long-term chart. Here's your head and shoulders top, left shoulder, head, right shoulder, neckline. The price projection was, I think, about 89, 88. We achieved that, and then we went down and hit a lower low. We got a higher low on our RSI, the relative strength index, and I thought, you know what, like on a monthly chart, that's a big deal. So I went down to a shorter term chart to see if I could find some bullish pattern to hang my hat on, because I always want to know what my reward to risk is. And this is what I found. Left shoulder, head, right shoulder. This is a daily chart. Each one of these bars represents a day. Whereas the prior chart, each bar represents a month. So this is a very short-term chart. Start with big picture, drill down the short term. Well, we got a breakout here. The price projection based on this pattern was 100, and prices chopped around for a while and then went up. As we were getting all these gaps up, all of a sudden everybody loved treasuries after they moved 5, 6, 7%. But I saw these two big uh, volume bars, and that was kind of climactic to me, meaning that people were chasing people that on CNBC that wanted you to own Nvidia after it went down 20%. They wanted you to buy treasuries after it had gone up 6 or 7%. But I was saying I did a couple of intraday calls and updates on this that you should be selling on these gap ups. I mean, these are big up days, up 2% for a bond, up 5% for a bond, up another gap up into the top. And I did one right here at the high, and I said, I'd be, make sure you're selling on this. We're up to my price projection. I thought about going to a neutral rating, but I decided not to because of something I'm going to show you here. But I said, you got to be selling into this. So, you get 100 shares, you sell 5 shares, you sell 10 shares, you sell 5 shares. You get a pullback like this, you're buying, you're buying 5 shares, you're buying 5 shares. What we had here the last 3 days is what's called an island reversal pattern. We got a gap down and then a gap up, leaving a space between the three, and that usually is good for a few days. So uh, the reason why I was buying on this, normally if it reaches my price projection, I'm kind of done. The reward to risk is no longer favorable. I'm looking for something better. But when you look at, so this is a daily chart, this goes back 6 months or so. But if you look at the intermediate term chart, we've got a 1, 2 year inverse head and shoulders pattern that is now intact based on this little pattern that I discovered back uh, a few months ago. So where the price projection on the daily chart was 100, on the weekly chart, where each one of these bars represents a week, we have a $115 price projection. So I added those last few days, and we'll see what happens. But I'm still bullish on fixed income, particularly on the long end. Bullish on TLT. Crude oil. Crude oil. This is something I just initiated with a couple of weeks ago. And at the time, I said, this breakout doesn't look for real, but this consolidation looks for real. And so we have a big ascending triangle. One, two, let's call it 2 years in the making. If we get a close about, let's call it 82.50, our price projection based arrived at by measuring the base of that triangle and projecting that distance upward is 148. So that's a huge, huge move. This could be really big, but it can also not be. But what I like about this is I know where my stop is. If it breaks down much below 70 on a weekly close, I'm out. So this week, getting a move down to 72.50 or so, I was buying just gradually, small buying, not big buying, because this is still a consolidation. We have no breakout. So just adding a little bit to the position, the reward to risk, though, still looks kind of favorable, but oil needs to get going here. So again, I think this is still intact. Want to comment one other thing on crude oil. Marathon Oil, which I initiated it with in April, it also had uh, a symmetrical triangle back in March, and only it had a breakout. It got bought out by ConocoPhillips shortly after I initiated with a buy. and it's got huge upside. It's an individual stock. If you don't want to own the commodity that I would be buying, it still looks great. And I wanted to make sure that you knew I still had a buy recommendation on Marathon Oil. I just neglected to include the chart. My apologies. Last but not least, REITs, IYR. This is the iShares uh, index ETF. So it has, 100, 200 REITs in it. And we got an inverse head and shoulders pattern here over a couple of years. So it's a good size pattern. Left shoulder, head, right shoulder, neckline, price projection, 112. It's a nice move in a market where technology is getting hammered and other things are not doing well. I want to own utilities to a lesser extent because they've moved so much. Healthcare, uh, AbbVie has moved a lot, so I'm no longer that bullish on it. There's some other things that I haven't talked about in healthcare that still look good. Biotech's number to mention something, a particular thing. And REITs, those are the kind of things that I want to own in this environment. So this is a breakout. We got a little bit of a pullback. It gave us a chance to buy, and we got 20% plus upside if we can maintain this breakout. So I like the overall index, REIT index, and then um, national retail properties. They're your strip malls that have Starbucks, they have Panera, they have all those kind of chains that are going to pay their rent on time. And this had a 5% dividend when it broke out. Maybe it's 4% now. But again, we had 25% potential upside on the breakout. Maybe that's down to 20 or so now, but I still think it's a good place to be. And last but not least, American Homes for Rent is a little more aggressive. We had a potential inverse head and shoulders pattern, left shoulder, head, right shoulder. The pattern isn't great. The right shoulder is larger than the left. There's no symmetry there, or not a lot of symmetry. But if you just look at this on its own merits, it is definitely a ascending triangle with many touches on both sides. And you had a chance while other REITs were breaking out to add to this position, which I initiated at the same time. It was funny because I had the least hits on REITs, so they weren't popular. So I knew it was a good investment because, anyway. And so last week or 2 weeks ago, we got a big up week in this particular stock. And then this week, we got a little bit of a follow through. So we got a $46 price projection or 24% upside, potential upside, and like this very much. Thank you for watching. You really should like and subscribe, or tell me, it's not good, the material, but let me know that you find it valuable or not valuable. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Have a great trading week.